Hey folks, George Tsiolis here, founder of Agoracom. Thanks for joining us on this very special day. I got a big announcement for you. We've been without a chief market commentator for the last couple of years, but I'm really happy to announce today the appointment of Allan Barry Laboucan as a new chief market commentator of Agoracom. Now, if you don't know Allan Barry, trust me, you got to get to know him because I listen to him, and if I listen to him, you need to. He started off in this industry in the 90s doing some consulting work with a lot of engineers and miners. In 2005, he founded Allan Barry Reports, where he became almost instant success in the online commentary to the point that BNN made him a frequent guest on the show for many, many years because he had great analysis, he had great insight, and I got to say, better than most people, and he put his money where his mouth is because quite often Allan and I would spar on conditions of the macro markets and conditions on individual stock picks. And Allan would actually challenge me, and more often than not, he beat me. And that's a pretty big deal, not because I'm talking a big game, but I got a pretty high success ratio on the trading side and on the macro side. So I'm really happy to announce that Allan Barry is going to be our new chief market commentator. Why that's going to be important for you is not only amazing analysis, not only amazing insight, but it's completely unbiased and independent. Even though Allan does some work for public companies, you just can't pay him enough not to speak the truth. So he's got some great insight. Second, his use of technology. You're not going to have to wait for a conference in a big city somewhere to see what he has to say. He's an avid user of video. For example, you're seeing this new format that we have today. He's an avid user of blogging, Twitter, so you can catch his commentary on the front page of Agoracom, but that might be content he's produced somewhere else. So it's going to be amazing insight, and as part of that, you're going to see Allan and I actually put on a weekly show using this format and even inviting CEOs and other market participants into the mix so that we can really give you some amazing insight. So without further ado, I'm really happy to present and welcome Allan Barry Laboucan. Allan, congratulations. Welcome to Agoracom.
Thank you very much, George, for those kind words in the introduction. I hope I can live up to all that. As you mentioned, I've worked really hard over the years to educate myself on the business. Working with a lot of great geologists, they really helped me understand the important things about the industry and what comes out of the drill hole. And I put a lot of effort into the work that I do. And you know, as a commentator, you always want to try and get the word out there to a lot of investors, and that's exactly why I have gladly joined teams with Agoracom, is because I've done a lot of research out there on the various different platforms that are available for investors into the resource space. And by far, Agoracom is the leader as far as an engaged audience goes.
Thank you.
And you know, that's really what I'm all about, George. I put out a lot of good information. I do a lot of homework to make sure I'm doing it the right way. And ultimately, I want to have a big audience to speak to, and that's what Agoracom offers. You've got a great audience out there of engaged.
They're smart. Yeah, they're engaged. They're smart.
They do their homework, which I'm always pumping investors that, you know, don't just listen to what I have to say. Go out there and do your homework, and you'll see that when you do your homework, why I get excited about certain companies. And so, you know, I'm really glad to join the team, George.
Well, and I'm glad you brought up the point about the size of our audience, because I'm telling you, this kind of decision we don't take lightly at all. I don't take lightly at all, and we're very careful about who we expose to our audience, and I just know it's going to be a huge win-win. So on that note, I want to go right into our first topic. All right, this is going to be an important topic, and I'm talking to shareholders and investors out there right now, and I'm going to be talking to companies as well. But if you're mad about what's going on out there, so are we. Right? We're not happy about the fact that you know, fundamentals and things going on in the markets aside, companies seem, too many small cap companies seem like they're just laying down and trying to wait this out. And some have a good reason to. They're going to the dead pool. We know that, right? But many don't have a reason to. So we want you to challenge your companies. And Allan is going to make that easy for you, because he's come up with a great system where he's categorizing companies in 3 simple buckets. You got the zombie bucket, and I'll let him explain that to you, the dormant bucket, and then you got the leader bucket. And what we want to do is give you the factors into what goes to each, identify leaders, and help you identify the dormants and the zombies. And if you have to, challenge them. And if they're not answering questions for you or not responding to you in the right way, then drop them. Because we need to make a change, and we want to be the voice of that change, and we want you to be the voice of that change. So, Allan, let's talk a little bit about your bucket system.
Sure. You know, George, what I see happening out there in the small cap resource space is exactly what you mentioned. There's a lot of companies that are sort of laying over, and I call them turning into zombies. And why I think it's so important to be able to clearly characterize companies is a key to why I've had such a high success rate in picking companies in the past.
Right.
Over the years in my Allan Barry reports, I selected about 50 companies. Of those 50 companies, almost half of them either were taken over by other companies or became turned from exploration companies into producers. That's the litmus test of what I call a successful pick. And I know of no other market commentator in this space that has that kind of a track record.
But that's also because you're not playing for a trade, which is what I like. You're not playing for a trade in what may be quote-unquote cheap today and you can make some points off tomorrow. You're actually doing the hard work of trying to figure out who really is who and who's got a chance of being success next 3-4 years.
Exactly. And the reason that I've been able to do that has a lot to do with how I characterize companies. In the past, what I really, and I still do to this day, whenever I was reading a news release, in the past, I always wanted to put a company in one of 2 buckets. Are they trying to find a mine? And those kind of companies, they tend to drill a lot of holes and they're always active. Or are they trying to mine the public? Right. Those are the guys that are really just trying to hype up their stock on a whole lot of hot air, and they end up costing investors a lot of money. And I always wanted to stay away from the mine the public companies and try to stick towards the find the mine companies. And that's why it's so important that I watch the drill rigs, I call it the truth machine. I followed closely what the truth machine was doing in order to differentiate. Now I think there's a whole, because of what's happening in the market, let's face it, we've been going through a few years of tough times. I see that I need to add a new layer of characterization and how I pigeonhole companies, and that's why I've come up with these 3 buckets that I put companies in. Still trying to find if the company is busy doing drilling or busy trying to talk up their story. That's still a main characterization. But then I get into these what I call zombie companies, the dormants, and the leaders.
So what's a zombie? What's a zombie company?
Well, to me, a zombie company is, and we've seen a lot of these lately, is a company that has very little in the way of project and very little in the way of money. What's going to end up happening to those companies? It takes somewhere in the neighborhood of $500,000 to $700,000 a year just to keep a company publicly trading, with all your listing requirements, your legal fees, all the accounting fees, all that stuff.
Employment, you got to keep some people hired.
Exactly. Those kind of companies, they're going to die. There's no getting around that they're going to die.
And investors have to come to terms with that and stop living on hopium, come to terms with that, let those companies go, take the capital loss, and start to possibly rebuild with leaders, I'm assuming.
Absolutely.
Got to do that.
You know, why not? If a company's just going to go to zero, why sit on that? Why not try to get it, even if you've gone down 90%, why not get that last 10% to try to grow again? Because it's only going to go to zero. It's not going to go back up to what you paid for it.
Yeah, because a lot of people say, well, it's trading at 5-6 cents now, so I might as well just stay with it. But the fact of the matter is, if they're a zombie, they're going to die.
They are. And there's no getting around it. These zombies don't have. I mean, the only thing I could tell you is if I was running a zombie company, I'd look in the mirror, I'd clearly try to ascertain what I do well and what I do poorly, go out there and find another zombie company that maybe you find someone who contrasts your abilities and your weaknesses, and try to get together, and maybe you can build something that way. That's a long-term way.
But highly unlikely.
Highly unlikely. The best thing is just to get them out of the market. They create a whole lot of. They crowd the space. They make it hard for investors to see the forest through the trees, and they just end up wasting a lot of people's time and money.
Yeah, distraction. They're a bad distraction.
Absolutely. So that's the zombie bucket. Stay away from zombies.
Let's go on to the dormant companies and who have a chance to go either way.
Now, these dormant companies, sometimes they have a project, a fairly good project, but no money, or they may have some money and no project. And those kind of companies, I also think that they need to reevaluate. Maybe they need to start by consolidating a couple of mining dormant companies that have money, the money companies, and then find a couple that have projects, try to merge them all together and create a better company down the road.
Now, isn't that the harder decision for investors to make, though? Because, how long can a dormant company, let's say you got a style one dormant company, you've got a good project but not a lot of money, so you have faith in the project as shareholder, but how long as a shareholder can you stick around? What's the test? A company can't be dormant for 2-3 years because eventually it fades. So what should they be doing? What do investors got to be looking for?
That company has 1 foot in the zombie bucket and 1 foot in the dormant bucket. And if they don't do something, they're going to be a zombie. And someone's going to come in and scoop that project up for next to nothing.
All right, so that's the hardest. So what do investors got to be asking to? So I'm an investor in ABC Resources. It's got a nice project but not enough cash. What are the hard questions got to be asking to figure out if I should stay with this company and give it a chance, or if I got to cut my loss there and move on?
You start asking questions that gives you an idea of whether or not that guy running that company sees the reality of what's going on here. If they keep on talking about, well, we're just going to wait until our stock price goes up a little bit more, and then we're going to do a private placement, and we're going to raise up some money, and maybe we're going to try this or we're going to try that, that tells me that they're not realistic about what's going on, and they need to get realistic really fast.
Yeah, but devil's advocate, hasn't that worked in the past? We had the crash in 2008, 2009, and companies got hammered, and then they laid low, and before you know it, things came back. They got their financing. We had a good 18-month, 24-month run there. So why isn't this the same? Why is this different?
Well, I think that this has come to a pretty critical point now that, now you're talking about back-to-back sort of, we got hammered in 2008, now we're getting hammered again. These companies, and a lot of those companies that were sort of dormant in 2008, they're still dormant now. But now it's getting really difficult for them to raise any money. So, yeah, I mean, I'm not saying that they can't continue to
but they better have a plan.
Juggle like this, but do I want to be invested in a company like that? That's a whole different ball of wax. And
that's where we move on to leaders at the end of the day, because sometimes you know what, I got to tell you, I agree with you. If a company is dormant and it's got something and you want to hold on for hope, life's short, your portfolio is short, and I see no reason why you don't jump onto leaders. And I think leaders is an obvious category, I think.
Actually, there's another group in the dormant category that kind of really gets me worked up. That's companies that have projects and have money, and yet they decide to go dormant. I can understand if you.
I can't stand. I see a lot of that.
I can understand if you got a project, no money. I can understand if you got a money and no project. But when you've got money and a project, and all you're planning on doing is to cut down your exploration costs and not try to do anything to broaden your audience, to bring new investors into your company, you're not doing anything for the shareholders. Really, all you're doing is trying to make sure that you've got a job. And that's not why executives are hired, and what investors, or it certainly shouldn't be what investors are hiring those people to do.
100% right.
You've got to be doing something for your shareholders, because like you said to me a little while back, we were talking at one of the conferences, and you mentioned, you said, aren't they supposed to be building a company for the future? That doesn't happen in a week to week, month to month basis. That's a long-term goal out there that takes time. So what are you going to do? Just, oh, well, we've decided that we're going to stop building for a while.
They're going to time the market, and we all know you just can't time them. You can't time market. You just got to build a company, and whatever happens by the time you get there.
Yeah, because now you got to be a geologist who knows how to put the holes in the ground. You got to be a marketer who can get the word out there, and now you're going to be a market timer too. Good luck.
All right, so let's talk about leaders. What you think it's an obvious category, but what do you look for in leader? What do you look for in leadership? What kind of company should people be looking for? And even name me one or two that you might see out there that that you might think are leaders right now.
Well, these days finding leaders is really, really challenging, and you know, I said earlier that you know, when it comes to leaders, you know, you said that it's pretty self-evident what leadership may be.
Maybe.
And I wrote I did a piece a while ago. I called it Zombies, Dormants, and Leaders, and a lot of people that follow me on LinkedIn are in the mining business. They're executives in the mining business. And I got a lot of pushback from that piece, from companies that sent me emails, and they said, well, I'm a leader, and we're going to do good, and this is why. So then I went and did some homework, like I always do, checked out their name, went and looked at their website, looked at their news releases. They hadn't drilled a hole in 2 years.
So leader is active right now. Leader doesn't care about the current market condition. I mean, they care. They prefer things to be better, but it doesn't impact their activity. So they're moving. They're either exploring, they're either expanding their land package, or they're drilling. They're doing all the they're doing all the geology necessary to keep building something for 5 years down the road. And I think that's what I look for. I look for a company that just doesn't care what's going on today, would prefer things to be better, but is building something because they know 5 years from now, they got 5 years of work ahead of them no matter what. So they might as well just keep on building, and they'll worry about the market conditions 5 years from now.
Exactly.
You got a couple of, I got to tell you, I got a couple of favorites there. I like what Dave Patterson's doing over at Donner Metals. You know what? He just kept on plowing through. He got the mine up and running like he said he would in Q1 2013. He's been raising money. The share price has been getting hurt, that's for sure, because you got more and more people bailing. But he's producing zinc right now. He's going to be producing cash flow for his shareholders.
He's moving the company forward. He's trying to do something for his shareholders. He's trying to get the word out there to a broader audience of investors. That's a leader. I'll give you an example. And I don't think that leaders, one of the companies I recently started doing some work for on the consulting basis is a company called Garibaldi Resources. Now, I want everybody to know that I'm doing some consulting for this company. Why I decided to do some work, and bear in mind that this is a 6, 7, 8 cent stock right now. I'm only interested whether I'm looking at featuring a company to talk about or working with some company on their strategic planning and their corporate communications and that sort of stuff, their branding and their online marketing. I'm only interested in looking for the same kind of companies in either one. And it doesn't really matter about what their stock price is at.
Right,
it's what they are doing. This company is looking at projects. It's trying to take advantage of the market right now and grab projects. It's doing some drilling when it can. It's trying to broaden its audience. That, to me, is a leader. And I think that there's some underlying characteristics of leaders that need to be taken into consideration. When, you know, a leader to me has to have a vision, because it doesn't matter what business you're starting in any sector. you are going to run into tough times.
Of course you are.
And leaders have vision of what they're doing and where they're going and where their sector's going. And if they have that vision, why that vision is so important is it keeps them moving when times get tough.
Yeah.
I don't want to candy coat this. We are in a tough times right now with the resource mining stocks.
But there are opportunities out there right now.
Exactly.
If you as a shareholder have vision, and that's what we're looking at people, right? I'm even telling shareholders, you got to have vision right now. You got to have vision. And I remember back in 2000 when everyone was into the dot-coms and going crazy, making 102, and I was one of them, right? There were some cheap companies out there at the time that were trading at nickels, dimes, and quarters that by 2004, 2005 were trading at dollars, and you could have made 20 or 30 times your money if you had the vision to be able to do the research and then say, I'm willing to bank on that company for the next 3 or 4 years. So
something you're bringing up there, George, is something that a lot of people don't know about Warren Buffett. You know how we always hear people talk about blue chips and penny stocks and stuff like that? Not a lot of people know that Warren Buffett, when he first started out managing money, he made a great deal of his money in penny stocks.
Sure.
And how he made that money is he called them his cigars that aren't there's still some smoking left in those cigars. His cigar butts. He would go around and he would look to where things were trading way out of whack with their fundamentals. He called them his cigar butts.
Even Warren at one point couldn't afford to buy, didn't have the pocket to buy the biggest companies. He had to start small.
Exactly.
Frank Justra, that's how he made his fortune.
And so for me, what it comes down to, and I've heard a lot of people talk about the resource mining sector as if it's a casino and it's gambling. If you look at these companies like that, I suggest that you save your money, jump on a plane, go to Vegas, and be a gambler. There is an intelligent way to do this. It's called doing your homework.
But you got to do the work. Can't be lazy. Can't wait for stock tips and pick it up off a message board and then go mortgage the house.
Exactly. Even whatever I'm saying or whatever anybody says, go do your homework. And it doesn't take a lot of time. You got to put a little bit of time into it, but the rewards, just like you said, you can buy for pennies what dollars. And when you could do that over and over, and I've been in this business since the early 1990s. And in the late 1990s, I saw a lot of opportunities out there because the commodity prices had been beaten down for so long and the resource mining stocks were beaten down as well. I'm seeing the exact same thing happening right now. These companies are tremendously undervalued. You look at a company like an International Tauriel Mines. Back in the peak, companies were being paid $150 per ounce of gold in the ground in market cap. Now, that company is trading at like $2.50 to $3 an ounce of gold in the ground. You
got to have some vision there.
You have to have some vision because there's just a lot of gold there. And one of these days it's going to come out of the ground, and you might as well pick up those cigar butts when they're cheap. And, I think that's a lot of what we're going to be doing with our future shows, I think.
Yep. And we'll leave it at that, exactly, because we're going to be talking about those kind of companies. We're going to be calling those companies out, and they're not necessarily paying us a dime. Like Donner Metals, I mentioned them earlier, does not pay me a dime. I've known the company, they've been a past client, but the company's great. A couple of companies that are sponsors, Pacific Potash on Agoracom, they've raised millions of dollars the first half of 2013, and they've hired a big-time president CEO of a Brazilian potash company, and so they're moving, they're shaking. Despite what's going on in the markets, they're doing those kind of things. So
doesn't matter, George, to me, whether I'm looking at investing in a company or if I'm looking at doing work with them. Nobody can pay me to take them and put them in the leader bucket. Nobody can pay me to put them in the dormant bucket or the zombie bucket. You are what you are. I report on companies that I work with, or I report on companies that I'm an investor in, or companies that I have no interest in at all. based on my analysis of where they belong in my characterization of those companies, and that's the way I've always been and always will be.
And that's where we'll leave it. So now everyone who's watching, you know exactly what we're striving for. We're mad. We see opportunity. We want you to get mad. We want you to start challenging your companies. If the companies aren't telling you what you need to hear as a shareholder, forget about the hope, forget about the hopium, what you need to hear, then you got to move on. Hopefully we're going to help you move on, sell them, do what you got to do. And
we're going to help people, George, to learn the questions, to ask those companies. We're going to help our audience become a lot more effective at what they're doing, and we're going to help them to find quality.
And that hopefully is going to spur some companies into saying, you know what, I have been dormant. I need to start moving. These guys are right. My shareholders are right. We need to start moving, because who knows how long this environment. I got to start building. I got to start acquiring. I got to start moving and shaking. So
they're going to have to, George. They either grow or die.
That's it. Allan, awesome to have you as our Chief Market Commentator. It's not going to just be these video shows. Look for Allan and his website, allanbarryreports.com. Look at the front page of Agoracom, where you're going to be able to see his blog posts, on my Twitter account. You're going to be able to get it wherever you want. Just look for it. We're going to be sending it to you. But thanks for joining us. And Allan, congratulations. Looking forward to you posting great information and sharing the kind of knowledge that's made me some money from you over the last couple of years. Thanks for doing it.
Hey, thanks a lot for having me join the team, George. I'm really excited about your audience that you've built up over the years.
Thank you.
Being able to help that audience do a lot better in the markets. I think we're going to have a lot of fun. And by the way, talking about how things are tough right now, I also believe that we're not too far away from things getting a lot better. So it's in these tough times that you can put your money to work, and when things get better, you're handsomely rewarded.
I got to tell you, I got to tell everybody out there, you and I had a debate about this back after the first financial crisis, and I said, no, things might even get worse, and you said, and you were absolutely 100% bullish. You posted on your blog, you gave the reasons why the S&P was gonna move the way it moved, and I totally disagree with you. I thought you were out to lunch, and you turned out to be right. So if you're saying things like that, then I'm looking forward to hearing from it, and so should you. You've been watching Allan Barry and George Tsiolis, the new Chief Market Commentator, and the old founder. Looking forward to seeing you next time. Have a great day. Have a great weekend.
Talk to you soon. Bye-bye.